Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, all. Ira Epstein of Lynn & Associates, and here we are on Friday, and this is the 26th of January. It's hard to believe it's already 26th of January, 2018, and this is your weekend version of my agriculture update. Now, on the weekend version, we do things a little different. We look at first one monthly chart, and then we go to a series of what we'll call the weekly charts. I want to also alert you that, what makes me do these videos is that you tell your friends about them. They keep coming back, and I'm going to start now my series, and I haven't done them in over a year, of live webinars. And the word is live. You're able to come in. You'll get an invite. It's an invite only if you're on our mailing list. Make your reservation, come in and enjoy asking questions. You can bring stock symbols, commodity symbols, ETF symbols. To me, a chart's a chart. And I'll do my best to answer your questions, and it's like a chat session. It's a lot of fun. It's visual. I control it. You have to have voice over the internet to hear me. It's not a dial-in service. It keeps the cost down for everybody, and it's pretty simple to work with. And yes, you're able to ask the questions right then and there by typing them in. I'll repeat them back to you. And I can always hit a button if you have a microphone, let you talk and say something that you'd want for the other people there to hear it, although most people are very bashful about that. So we've learned the writing is better. All right, let's talk about the event. We had a cattle report today. The way that we're interpreting it in general, and I'll write about it in my research over the weekend, is that it looks as though the further back time frames are going to see even more cattle come on market. Don't know the immediate impact for the front months, but the back months, this should be a little bit on the bearish side. That's the initial reaction. When we go to the monthly chart of soybeans, the one thing that you should be seeing right here is you'd been in a down thrust. You've been going sideways literally all of 2017 and 2018. You had one step down in 2017, and then you bottomed and you're going sideways. Will that turn out to be a base to work higher from, or a top if it breaks out under the $9 to go lower from? That is going to be the big question. In Brazil right now, it is the key time for a lot of the crops. We're seeing the early reports come in, and we write about that in our daily research for you as well. On a weekly area chart of closes, that's why this looks different. It just takes the closing price. For the week, we're up 8 1/4 cents. We're over the 18-week moving average of closes. My theory is that when a market is over that moving average, it has bullish bias. When it's under it, it has bearish bias. I look for more than that. I take a chart, be it weekly, daily, and this is what it looks like. You had a breakout here to the downside that had no carry through. Once you got through this high that I'm pointing at, which if I put a swing line on it, it's 966.5. Here's what the swing line study does. You can look at this chart all you want, but where's the prior highs and lows if you set a certain set of rules every time and you set up an indicator to do it? In mine, you had a lower low and a higher high. That is not the definition of a trend. It doesn't mean you're not thrusting higher, but you're not trending as you're going higher. If you use the definition as I do, then an uptrend is made up of higher highs, plural, and higher lows. You don't have that. The market is fought a battle and fighting a battle. It's two parts to it. At the 100-day average of closes, this green line, with support now showing back up at the 18-week moving average, the red line. I think you'd be hard to press that and say no. If you look at Bollinger Bands, understand what they are and what they can provide. A Bollinger Band is an algorithm designed to keep the market trading within them 95% of the time. Does that mean the market can't move out of them? Absolutely not. In fact, often what takes place is sideways action as the band narrows in. Means volatility has come out of the market. Any of you soybean traders, you know the volatility has come out of these markets. And as that happens, these bands narrow in. Think of it as a pipe, and you got a spring winding up. When it breaks out, be it to the upside or downside, because of all the compression of price within that, the markets take off, be it up or down. It's one of the ways that I teach that you can understand it. In terms of looking at the market, the bias is up in beans because you closed over the 18-week moving average at 975.25. You're 10 cents over it. Momentum is pointing up. You see that in the oscillator called slow stochastics, which often price is led by momentum. And that's what we have. We have that upside momentum. So we have a market that's in some resistance, support 975 and sideways action. In the soy meal, the market got up and closed right where? Over the upper Bollinger Band. That's the first time it's done it since back over here. The market is still stuck within these narrow bands, or is it breaking out right now? That's going to be the key for everybody. Again, we had the lower low, higher high. You try to break out, you got thrown back. From the high this week, you gave back $13. So if you think that staying over that upper Bollinger Band and buying over one wasn't painful, I disagree with you. In soybean oil, the 18-week moving average of closes in red, the 100-week are your resistance points. The pattern is one where you got a lower low, but you made a higher high. So again, I'm not trending. The market is now downside momentum that is waning. It's starting to flatten out. The bias down on the chart. In the corn market, this market's got an uptrend. It's got the pattern of higher lows, higher highs. It has rallied right into the classic thing that I tell you, the combination of the 100-day average and the 18-day average, and this is where the game has to be. It could be decided, it could be just stalled out, but this is where I would expect to see some professional money lightening up positions, not necessarily giving up their position, to see if the market can follow through. Momentum is up, bias is up, but you are at key resistance points. In the wheat market, wheat has flung itself around, got over the 100-day average and the 18. Momentum clearly pointing up. The next target, if the market reaches higher, about a dime higher, 451.25. In the cocoa market, should prices get up and over 2011 and close over that, you would turn this week the trend up, the bias up, and momentum is already up. So the bears, we know the number that they want to defend. In addition, you already have the pattern of higher lows, higher highs. So I'll call this chart a lot of things fighting on it. In the sugar market, should the market get under 1302, you will have the pattern of lower highs, lower lows. Admittedly, here's the problem. On the weekly chart, the support's 1306. So trying to get short down here, unless you believe that this sideways action, which is very possible, is going to break out to the downside and carry further, that would do this market in. This is still a dangerous area because when you get down to Bollinger Bands, you often find some support. Difference this time is the 100-week average is way over the market, as is the 18. So this market's got more bearish bias, downside momentum, has not flattened out that momentum yet either. In the coffee market, the battleground is now, actually this arrow should be taken right under this low, right here. You have higher lows, higher highs. I've actually got this chart wrong. I didn't catch it. This arrow should not be here. It should be pointing up. So you got the higher lows, the higher highs, and you closed over the 18-week average. The trend is turned up until 119.60 is taken out. Should the market want to rally more, I'd look to see when you reopen on Sunday where that 18-week moving average, not the moving average, the 18-week slow stochastic moves down. In the cotton market, for the first time in a long time, we're getting a pattern of lower highs, lower lows. It all happened against the upper Bollinger Band. The market momentum is still what we call locked in to the bull area, but if the red line, when we reopen next week, gets under the 80 level, watch out. This could be a sign that the market wants to back off a bit here. In the cattle market report, going into the cattle on feed report, you have a longer-term bullish chart. You have higher lows, higher highs. The upside target is 127.27. Momentum is pointing up. And on pullbacks, the support's almost $6.50, $7 lower towards the 117.95 level. In the hog market, the momentum is still locked in bullish. You have the pattern of higher lows, higher highs. What's a common theme we're seeing in these markets? They either are as a whole or trying to get more bullish, with the exception of the sugar market so far. Pretty interesting. So I put it all together and we try to talk about it. And one of the ways that we do that is with our price counts. Now, we do our price counts as part of what we call a chart of the day and our price count information. Price counts are this. Think of that you're in a trend and you're trying to figure out where might the market go. Price counts give you zones, and that's the key. Each zone that it reaches for has less percentage of being hit. The first count has a lot more percentage than the second more than the third a lot more percentage than the fourth, and getting beyond that, very small percentages. They can happen, but you switch strategies from maybe futures to option strategies along the way. We explain that all in our price counts. How do you get to see it? Call us. Go to our website. You'll see a carousel of free offers. Sign up for it. You can click right up here if you want. If you're watching me on YouTube, it'll take you to that page. Or underneath us on many websites, it says, click here for Ira's free information. Remember, I'm going to be announcing when we're starting our webinars this week. I have to make my decision. It's been up to me. I'm the laggard, but I keep seeing different things in software that I like and don't like, and I want to make your experience very easy. I'm Ira Epstein. You have a great day, and I will talk to you all come Monday. Have a good weekend.